Welcome, everybody, to this week's podcast episode for the Financial Freedom Podcast. And I'm your host, Dr. Christopher Liu. As I talk about four different types of freedom: time, financial, location, health freedom. In that light, I'm always interviewing entrepreneurs, people doing things on the cutting edge, moving the needle. So today we have a business finance, Bo Eckstein. He is the founder and CEO of Emerge Lending Group. And so today's talk is going to be all about business financing, SBA loans, all the different options. So I think this is going to be a great conversation for all those entrepreneurs looking to access capital. So Bo, welcome.
Thanks for having me. I'm excited. I always like talking about financing,
Yeah.
and
Uh,
it goes
yeah.
it goes hand in hand with financial freedom, right? We need the leverage to get us out of the rat race. So that's what I help people do.
Yeah, exactly. And we connected through Podmatch, and you have a really interesting background. Tell us how you got to found Emerge Lending Group.
Sure. I was one of the kids that wasn't very good in school. I never opened books. Was never really interested growing up in school. And later in life, I became a lifetime learner, which is an interesting story. So when I was growing up, I was like, I don't know what I want to do with it. I graduated high school. I tried to go to junior college and just really wasn't a good student at that time, and always had a passion for real estate. So I ended up working at 20 years old as a telemarketer for a mortgage company. And then I started making all these loan officers a ton of money because I was pretty good on the phone. I didn't mind making cold calls. And then I quickly I grew up in California, and in California, you needed to have your real estate license to originate residential loans. So I got my license to originate loans, and I became a loan officer doing residential mortgage brokerage. And I did that for many years. And then in 2005, I decided to move from California to Nevada because Nevada was a brick and mortar state. We opened a mortgage brokerage in Lake Tahoe, right on the lake. It was awesome. I lived in North Lake Tahoe, where they say this is a part of town where they say the billionaires kick out the millionaires because it's all billionaires in this. It's called Incline Village, Nevada. So we opened this mortgage company, and then I thought I was really smart. So I started buying a lot of properties, right? And this was all 2006 and 7. We know what happened in 2007 on the West and most of the nation. Home prices dropped like 60% throughout Nevada. So I quickly learned that I didn't know much about real estate investing. Basically, had to move back to the Bay Area where I grew up. I was in my 20s at the time, and I was about 28. And I said that was my early midlife crisis because I had to sell a bunch of houses at losses. I had to actually foreclose on a few houses all in my 20s. And that was a very humbling experience because I thought I was this big real estate tycoon. So I moved back to the Bay Area, and I was like, what am I going to do? I don't have a college education. The mortgage business is gone. We couldn't originate loans. All these new laws were coming in, and it was just a crazy time, like from 2007 to 2008, 9, tons of foreclosures. So I had my real estate license. So I started selling houses, and I was going to go back into doing residential loans, but I just didn't want to do it anymore. And I happened to run into a friend of mine who was he was a managing member of a private mortgage fund, and they would lend money to house flippers. So I actually started originating loans for this fund. And then after a while, I said, wow, these guys aren't that bright. I could start flipping houses. At that time, I had no credit, no money. I had the creditors chasing me. And I said, how am I going to flip houses? I don't have money. And I became a creative finance master at that time because I'm like, okay, I'm going to find a money partner. We got hard money. And then I'm going to partner with a contractor. So that's what I did. I partnered on all these deals with none of my own money. We started flipping houses, making pretty good money. And then over time, I just evolved. People would call me because they needed to fund certain deals. And I just became friendly with all the funds throughout California. And then as I started doing that, I'd get reached out from different developers and so forth. And they needed bank financing and they needed SBA financing. So I self-taught myself, and I've gone to a lot of classes I'm a member of NAGLE, which is the National Association of Government Guaranteed Lenders and all that stuff. So basically self-taught myself through taking a lot of classes, right? So somebody that didn't like school back in the day ended up becoming, to this day, I'm 45 years old and I'm constantly taking classes. But I found that if I was interested in the subject, I was a good student. Pretty much all my contacts are real estate investors or business owners all my friends. So I'm talking about people that do $60 million multifamily acquisitions. And then over the last 6 to 8 years, I got more into the commercial space. I taught myself how to originate SBA financing and like creative financing, how to put these structures together.
Yeah.
And yeah, so that's how I came to be. And basically, California real estate broker, Nevada salesperson, mortgage licensed as well. So basically, my background in a nutshell.
Yeah, it's quite an interesting story, and we'll start it off. A lot of entrepreneurs, they either bootstrap or they find financing. What are some of the easier ways of obtaining financing for business?
So for businesses, most businesses, you're going to utilize SBA financing, right? So you can go out like there is 13 million businesses that are owned by boomers right now, and most of them don't have succession plans. So there's a huge opportunity. Everybody was real estate, but a lot of my friends are business. They're looking to acquire businesses. With the SBA financing, you can get 90% leverage with SBA 7A. So I can go and buy a cash flowing business that's been around for 30 years that the seller wants to sell because he's retiring. He doesn't have children that want to run the business. So I come in there and I can arrange the financing. I could put 90% from SBA, and SBA doesn't make the loans. They guarantee a portion. The banks and the credit union partners that are approved with the program are the ones that actually make the loans. And SBA is really an amazing tool, right? You can get 90% leverage. And here's the best part. You can also, a lot of these sellers, they don't need the money and they don't want to get taxed all on that money. So a lot of times in these business acquisitions, they'll carry back some of the paper. You need a 10% equity injection on this business acquisition, assuming the cash flows there and it meets the debt service requirements. But the seller can leave 5% equity in the deal, which is called standby. So I only have to come in on this $1 million business acquisition. I only need 50 grand and I'm buying an income stream of X amount of $100,000 a year, right? And that 5% can also be a gift or it could be a potential investor. Anybody that owns less than 20% of the business entity, that's the new entity group doesn't have to go on the SBA loan. So I'm doing that right now. I'm actually acting as an investor. I'm going to own 19% of this. It's a kind of a resort type of property by putting up 50-ish thousand dollars, right? And I don't have to sign a personal guarantee. So there's a ton of ways of structuring these deals. And that's what's really exciting about SBA financing. And the loan is, these loans are more aggressive, right? Because a big portion of the loan is being guaranteed. So that's why the banks make these loans that they normally wouldn't make.
Hmm. Yeah. And so how does an SBA loan, so people are fairly familiar with mortgage, 30, 15 years, 30 years, X amount of interest. How does it work with these business loans?
Sure. So SBA depends. It could be just a straight business acquisition. Okay. So let's just say I'm buying an HVAC company, has no real estate with it. That's going to be a 10-year term. Okay. So anything that's a business acquisition with no real estate is going to be 10 years. Now, if there's real estate involved and the real estate component makes up 51% or more of the acquisition price. So let's say I'm buying a hardware store with real estate and the real estate is valued at 2 million and the business is valued at 500,000. That's going to be a 25-year term.
Mhm.
So business acquisition, 10 years. Now, if the business value is greater than the real estate, it's going to be a blended amortization period. That's going to be it's just factored by the different bank or whatever. Anything that has an amortization over 15 years, the loan can have a 3-year prepayment penalty. Any business acquisition loans, which are 10 years, only have have no prepayment penalty.
Mhm.
So then you have the 504. The 504 loan is good for real estate too. And that's a fixed rate product. Typically it's a first and a second. And then there's the SBA 7A and then there's the SBA 504. They both have their uses in the 504 is really only for hard assets.
Mhm.
The 7A could be just for a business acquisition. So the other thing I didn't tell you, when I'm buying this HVAC company in the total project cost, so I'm buying it for $1 million. I'm also getting $100,000 of working capital and I'm getting 3 months of employees compensation built into the total project cost. So I'm buying it for $1 million. So the total cost is $1.3 million. I'm getting 90% financing on the $1.3 million, assuming that the business cash flow is there.
Mhm.
So you're building in working capital, you're building in all that. So it's really a phenomenal program because you can go into these businesses. I'm actually listening to a great book right now. It's called Buy Then Build. It talks about why it's easier to, instead of a startup business. And the gentleman that wrote the book is, listen, we out of college, I'm a smart master's degree. We had this great business concept and it failed. And then he took the same model, but he bought an existing business and he bolted on the same services and ended up becoming a huge business. And so this book is really good. And so I think anybody out there that's watching this or listening, like I would say like right now is like, it's a tsunami of an opportunity to buy a business or potentially start like a franchise or so forth. So franchises can also be financed. Those are considered startups, but you can get up to 90% financing with certain franchise brands.
Yeah. And so, like, for example, like for assuming, for example, HER or any sort of website that lists homes, where are some web or resources that individuals can look for businesses on sale?
Yeah. First off, I would say, because I'm going through the book right now, Buy Then Build, listen to that because he has a great framework of how to analyze these businesses, right? Because we got to get a basic understanding of what we're looking for and how to underwrite the deals. And I think that's a good place to start. And you can get it on Audible if you don't want to read. There's business brokers, right? So business brokers, the same thing with like when we're looking for multifamily properties, what do? We try to make relationships with the brokers that sell in the market that we want to buy that have the pocket listings, right? This is the same thing with business brokers, right? There's these certain business brokers that have the deals and they want to work with the players, right? So you have to position yourself as a player, even if you're not yet a player, by understanding the game of SBA financing, understanding how all this works and how to quickly determine if the business is a viable business for acquisition. So it's the same principles, really. There are websites like Biz, what is it, Buy Biz. So anyways, there's 3 or 4 different websites that you would go to that you could look for business opportunities. But typically those ones are like, that's like the loop net of the world, right? You're not really going to get your deals there typically. You're really going to make relationships. You're going to find the business brokers that are doing a lot of deals. You're going to talk to people in certain markets. That's how you're going to find the deals. Just like most people don't go on LoopNet to buy a multifamily property. You're not going to go on these websites. I mean, you might want to go on these websites to find the business brokers to start like, reaching out to and telling them what you're looking for. But I find like most people are going direct to the business owners or they're getting referred in and finding these great opportunities.
Yeah.
And you can really negotiate with these sellers, right? And it's almost expected a lot of times that they're going to carry at least a portion of the paper back on these deals.
Yeah. Yeah. And I assume finding business brokers, same thing, networking conventions, LinkedIn, just word of mouth, your networks and referrals to find these brokers.
Yeah, they're all over. You can find them on LinkedIn. You can find them on the websites. They will advertise their listings on websites. But like anything, the good listings probably never hit those websites, right? They're the ones that are like, hey, these business brokers have a buyer's list in there before they upload them anywhere. They're going out to the buyer's list, just like in multifamily or any kind of real estate. It goes to their buyer's list first because they'd love to handle the transaction from the buy and sell side. So it's the same thing. But I think, yeah, you got to identify like what type of business, like what you're looking for, and then just go after it. But where else can, for less than $100,000 potentially get a $200,000 salary every year, right? It's an amazing return. It's actually probably some of the best returns I've seen if done correctly.
Yeah. Yeah. And then we can apply these concepts that you're talking about to what a lot of the people may be interested in, either franchise or rental, short-term rental property. Tell us some of those different avenues.
Yeah. So you're not going to really finance. You're not going to finance like a residential STR, short-term rental, right? But you're going to be able to finance a boutique motel. You're going to be able to finance a bed and breakfast potentially with SBA. And so making SBA sound really great, but what are the downsides of SBA? Okay. On the SBA 7A, if there's what's considered a collateral shortfall, let's just say you're doing a business acquisition and there's no collateral. You're buying the business, what we call blue sky or intangible. There's not really anything, there's no hard value, right? In business value. So there's going to be a collateral shortfall. So the downside of the SBA is that the SBA guidelines say if there's a collateral shortfall, you have to look for additional collateral from the borrower. So that could be putting a secondary lien on your primary residence on a rental property, right?
Yeah.
So you just got to be aware of that they're going to look for additional collateral. That's like the major downside. The other downside of SBA, if you're like me and have a lot of business entities and affiliate companies, you need 3 years of tax returns on all those affiliates. They're trying to get away with that because I have a gentleman right now and he's got 23 affiliate companies, and he's just pissed off trying to get to the finish line.
Hmm.
But other than that, there's no other financing like it out there. Most conventional financing on just a business acquisition, they might lend you 50 to 60% leverage, not 90% leverage.
Yeah. Interesting. And then it's been especially business financing, creative financing. Tell us some tips on how borrowers can be more bankable.
So yeah. So anyway, if you're buying an existing business, we need 3 years of seller's tax returns and a year to date. We need the tax returns to underwrite for SBA guidelines. We need 3 years of your tax returns, year to date, debt schedule, and a personal financial statement. That's all we need to get the ball rolling. And we can say, hey, does this business cash flow to support the new loan amount that we're looking for? You can also do turnarounds too. So SBA does, let's just say you're buying an RV park
Mhm.
and it's been mismanaged. If you're a strong borrower, SBA, even if the debt coverage is under, or it's like 1% or maybe a little under one, where normally you're not going to get traditional financing. If we have a good play, meaning, hey, the manager's been mismanaged, he lives across the country, we're going to come in, we're going to do 200,000 in CapEx. If you have a good plan, you can get those turnaround type of deals. And where can you get 90% of the total project cost? Getting 90% acquisition, 90% of the CapEx to do this type of turnaround projects. That's available too. So really it comes down to just the beginning part of it is, so what I do in the whole mix, let me break that down. I'm like what you call the quarterback. So I get the ball first, right? I'm the middleman, and the borrower or sponsor comes to me and says, hey, I'm looking to do this. I ask a couple qualifying questions. You buying existing business? Can we get the tax returns? Yeah, we got them already. Okay, we need a financial statement done and this. That gives me enough information. I take it out to my network of banks, non-bank SBA partners, and I say, hey, how do you like this deal? Certain banks overlay. Okay. And overlay means like the guidelines say that we could do it a certain way, but the bank's not going to do it that way. They're going to put restrictions on it. They overlay. So certain banks don't like certain asset types. Certain banks only want to do SBA with real estate. Certain banks specialize in just the business acquisition. So what I do well is I know all these bank partners and I just find the right fit. And that's, and the best part of it all is on SBA financing, I don't charge a fee to the borrower. The banks actually want me because I bring them business, right? So the banks end up paying me a referral fee.
Mhm.
So it's like a no cost, awesome service to offer to people that need SBA financing. So,
Yes.
because if you go to one bank, this happens all the time. They go to their local banks, not really a good SBA lender. They do SBA, but they're not a top tier SBA lender. They drag their feet. They end up coming back and saying, hey, we could do this deal, but we can only go to 80% of total costs, where we could go and maybe get 90% in another bank. So that's what I do. I help facilitate that.
Yeah. Fascinating. How can people follow you on social media, contact you, and follow you?
Sure. So they can go to you can listen to my podcast. I talk a lot about financing. So if you go to investorfinancing.tv, that takes you to my YouTube channel. That's investorfinancing.tv. You can go to you can go to investorfinancingpodcast.com. It'll take you to the website and you can find all my contact information. I have a Calendly link. I'm pretty easy to get a hold of. If you have financing questions or have a deal in process that you're looking to finance, you can go to bookwithbo.com. You get on my calendar and I meet with you for 15 minutes and we talk all things financing, whether that you're trying to acquire multifamily, assisted living facilities, you're starting a business, pretty much anything investor or business related, I finance. I don't do any consumer loans anymore. I don't do residential owner occupied, but I do portfolios like where people are buying like 30 houses at once, or if they're financing short-term rental properties. We also help house flippers to flip properties with bridge finance.
Yeah. And thanks so much for all the audience out there. Bo's resources will be in the links and show notes. Be sure to follow him on all the social media channels, Facebook, LinkedIn, Instagram, and YouTube. He's also his podcast. Be sure to follow that and check him out. His website, he's got Book with Bo with a 15-minute strategy call to help you with your needs. And again, reminder to the listeners, this is for educational purposes. Be sure to check those out. This is not advice. Do your due diligence. And with that, thanks so much for coming onto the show and thanks for a wonderful conversation.
Thanks for having me. I appreciate you having me here.